Hello and welcome to Crypto Weeklies. Today we are going to discuss about the graph, conduct machine learning based price forecast, accumulation strategies and regression analysis. None of the content is financial advice. The chart that you are seeing on the screen is the weekly price action for graph. You can check it over here on CoinMarketCap. The 18 cents valuation currently by market cap ranked number 50, fully diluted market cap at around $1.9 billion, current market cap around $1.7 billion. In terms of tokenomics of the total supply of 10.8 billion, 9.5 billion are in circulation. This particular crypto does not have a max supply. In terms of analyzing the machine learning based price forecast, now that we are at around 18 cents level, the key valuations forecasted by our model at a base case, this is in pink, the bull case is in yellow, and the bear case is in green. The base case is between 17 cents and about 19 cents between now and end of year. The bull case is between 19.5 cents to about 37 cents at around 68% confidence level, and that is one standard deviation confidence level, and the bear case is between 9.5 cents and about 15 cents. So that's the machine learning based price forecast for graph. This is all of this content is available on cryptoweeklies.com for each individual crypto in top 100 cryptos, and then by clicking on the graph you'll get the machine learning based price forecast, and then going to the regression based analysis. This is the polynomial regression function. The purpose of this analysis is to identify which phase of the market or which type of moves a particular crypto is having. Right now, per the regression model, the base case or the fair value for graph is at around 13.6 cents. Price is above the fair value. To check if this lower, if you want to, so just a second, if you want to check if the lower lows and lower high structure has culminated and price is raring to go back up to the one standard deviation peak, the first value of concern would be this $19.45 cents. If price rallies beyond 19.5 cent, that means that the structure which essentially had its last high at around 22 cents, first the 19.5 cent related high should be taken out. If that happens, then we look for the 2 standard deviation ceiling. If graph breaks this 27 cents, so first 19.5 cent, then 27 cents level, at that point this regression function, right now having a downward slope starting May of 2024, shall have a different kind of slope where the bias is back to the bullish side, like it started having since February of 2023. And if on the other hand, if the market were to cool off, the first level of support would be at around 13.64 cents and the second at around 9.6 cents. That's these are really close to the machine learning based price forecast as well. The 9.5 cent, if you remember, this is the one standard deviation bottom, and the 27 cents, and between the 27 cents and 37 cents, that's the 2 standard deviation peak for graph. The one standard deviation peak for the graph is at around price action at around between 19 cents and 37 cents. The 2 standard deviation peak is way up at around 95 cents. So in terms of accumulating graph, there are 2 models that we can focus on. The first is the shorter term model. The SMA model looks at if the price is close to a peak like it was during March of 2024 when the risk level was at around 88. Right now it's at around 66, 0.66 risk, again kind of a middle of pack. During the bottoming phase of graph also we had in the similar risk level. This is because the price is moving fairly close to the 20-week moving average. In terms of the dollar cost average related model, this is again similar to the polynomial regression function. Instead of having different kind of levels, this is normalized between 0 and 1 risk to provide if the crypto is on its way to bottom, like it did in March or August of 2024, when the risk level were at around 0.15 in this risk band. The best time is between 0 and 0.1 risk. You can see over here, this is identified by the polynomial regression function. Per this analysis, right now the risk levels are at around 0.46. That means again slightly over the fair value regression at around 14 cents, the peak regression at around 25 cents, close to the 2 standard deviation peak per the regression polynomial regression analysis as well, and the and the bottom is at around 9 cents. So those are the key levels related to graph. If we were to summarize everything, this is the price. If it were to go back to 20 cents and then back again up to 27 cents, there would be a change of market momentum, and as well as the sentiment around graph, and that is also close to the machine learning based price forecast for graph. In terms of analyzing the wider market, and again we have also tabular data for week by week forecast. The base case is in the middle. To its left is the 1 standard deviation bear case, to right is 1 standard deviation bull case. All of the content available on cryptoweeklys.com. In order to analyze the overall sentiment in the market, not just graph but all the top 100 cryptos by market cap, and their risk journey between 0 and 1. Right now the latest risk score is at around 0.19, again fairly close to this 0.2 level, when the color code would change from green to yellow. That would mark a moderate risk environment. Right now we are in a low risk environment. The best and the lowest risk is during the depths of the bear market, when the risk is between 0 and 0.1. The lowest risk, if you were to add that would be between 0.1 and 0.2 risk. We are in this environment starting most of the August and September of 2024. So that's where we are at. The highest risk is, again you can see the last time we were here is per this model is December 2021. We haven't been in that environment. Even the high risk environment, the last visit was April 2022. So that's where we are in the grander scheme of things. To identify any potential peaks or bottom, the last analysis of some help would be the SMA analysis for Bitcoin and ETH. This is the Bitcoin and ETH and how they are doing on their 20-week moving average, and based on that that proportional distance, these risk levels are normalized between 0 and 1. Per this analysis, we were in an overheated situation back in March of 2024, when BTC risk was 0.9, ETH risk was 0.8. Right now BTC risk is at around 0.36 and ETH is at around 0.38. Again, you can notice that whenever Bitcoin risk is higher than ETH risk, again at those points DCing ETH also makes sense. And again, one could argue, if DCing ETH makes sense, DCing alts also makes sense at that point in time. So again, we are in the low risk regimen for alt accumulation as well as Bitcoin and ETH accumulation at this point in time. With this, I'd like to conclude the video. Hope you liked the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.